of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show. Today is June 1st, 2023, and we bring you the story behind the major developments in the banking space. I am Ruchika Chitravanshi. Today's cover story concerns private insurance companies and how they fared this year. In our Banker's View segment, we have Anubrata Biswas, MD and CEO of Airtel Payments Bank. In Banking for You, we will talk about money changers. Later, our consulting editor, Tamal Bandhopadhyay, would join us to discuss the landscape of foreign banking in India. At the end of the show, we will share with you the last week's poll result and the question for this week. Let's begin. Life insurance industry's new business premium in April this year was 30% lower than last year. But for private sector insurance companies, the story was different than last year. Why was it so, and what is the future outlook? Manojit Saha finds out in this report.
The life insurance industry's new business premium, or NBP, in April 2023 was 12,565 crore rupees. This was 30% lower than the NBP of 17,940 crore rupees a year ago. For private sector life insurance companies, the NBP grew 8.5% to 6,755 crore rupees. There are currently 23 private life insurance companies operating in the country. If the private sector insurers saw growth, what dragged the insurance sector down? The answer is the Life Insurance Corporation of India, better known as the LIC. The LIC's new business premium in April dropped 50.41% year-on-year to 5,810 crore rupees due to a sharp drop in group single premium.
April month was relatively weaker for the industry, and as you rightly said, there was a 30% decline that the industry reported in the unweighted new business premium, and that has been the weakness was there like for both the private players and as well as for the LIC, and to some extent it was expected because after a blockbuster March month, because March was a month wherein the budgetary changes were going to come into being from 1st of April. So in anticipation of that, there was a lot of pre-buying, and we have seen that the entire industry, especially the private ones, reported over 50% growth in the month of March. And on the weighted receipt premium, individual WRP, I mean, and which is where with this sort of pre-buying and the budgetary changes coming in, it was largely expected that April and probably the coming months may also be relatively softer, because many customers who were looking to buy insurance would have sort of preponed their decision and would have done that in March.
The Union Budget for 2023-24 proposed to tax a yearly insurance premium of over 5 lakh rupees from 2023-24. As a result, many customers decided to buy insurance policies in March before the new regime kicked in. As a result, the NBP of private sector insurance companies grew by 20% in March 2023. For the financial year 2022-23, life insurers have reported a nearly 18% growth in NBP to 3.7 trillion rupees. Out of this, LIC saw its NBP increase by 16.7% to 2.31 trillion rupees. At the same time, private sector insurers' NBP increased by 20% to 1.38 trillion rupees. Due to last year's high base, in addition to tax changes, growth in FY24 for life insurance companies could be subdued.
This will be more so in the initial months, because whatever changes have happened, that will take time to get absorbed. And given that the high flow of premium that was recorded in the month of March, that also will have a bearing on the premium collection in the ongoing months, in the April to June, July. And alongside this, you had also the changes on the tax side, wherein the government increased the ceiling under the new tax regime. and that will also have some bearing on the premium growth, because there is now not as much of an incentive to buy insurance and put money into other ATC products to save tax.
The changes in tax policy, particularly on high value products, could hurt private players more. They had positioned themselves to policyholders using such products with guaranteed returns. At the same time, LIC was focused more on participatory products.
As Manojit's report indicates, the going may get tough for private sector insurers due to the new tax regime and high base of last year. In an exclusive interview with Business Standard's Manojit Saha, Anubrata Biswas, MD and CEO of Airtel Payments Bank, shares the bank's evolving revenue model and the future growth plans. Here's the chat.
Hello and welcome to the Business Standard Banking Show. Payments banks are those entities that generates revenues from remittances, from providing business correspondent services, cash management services, among others. Payment banks are not allowed to lend. According to RBI data, of the 6 payment banks which are operational, only 3 were profitable as on end March 2022. Today we have Anubrata Biswas, the MD and CEO, Airtel Payments Bank, to discuss the bank's future growth plans. Mr. Biswas, welcome to the show.
Thank you. Pleasure to be here.
To start with, how has been the year FY23 for the Airtel Payments Bank? If you can give a sense of that.
Look, for us, revenues have been growing at a CAGR of over 40% over the last 3-4 years. We ended the year with a tad short of 1,300 crores. That's over a 40% growth over the previous year. The bank's been profitable for 2 years, and we are seeing very rapid growth in our core propositions. So Manojit, just to start and comment maybe quickly on the introduction to payments banks which you made, I would say that payment banks have evolved into slightly different models. You see 3-4 largely operational payment banks. But I'll talk a little bit about our model to answer fully your question.
Yes.
First is we have 3 strong propositions. One proposition we have is a deep rural proposition where large number of rural consumers are onboarded by our banking network, and they broadly use our accounts for access services, which are cash withdrawal services primarily.
Correct.
This is large. We have over 20 million users of our platforms in this business, and this is rapidly growing. So the reason why I don't want to talk about a product market like remittances is because ultimately a payment bank model is linked to a number of users using its services from which you get revenue.
Correct.
So the second proposition we have is a digital proposition. We have seen that the payment bank account is used as a secondary bank account by urban consumers who are concerned about safety and want to keep a secondary bank account.
Okay.
This is very rapidly growing. Again, we are the fastest growing digital bank in the country today. Deposits are growing in excess of 60 to 70% year on year.
Right.
A large number of customers actually onboarding themselves in urban areas as well. The third proposition is a B2B proposition, which, as you mentioned, is cash management services. But our thought process is that we want to offer consumers, B2B consumers, a full set of offline and online digital collection services. So if you really step back, Manojit, you have a model which is multi-segment. You have a model which is both India and Bharat, and you have a model which is both cash and digital. So the simple way to look at it is I just view payment banks to be India's new age digital banks.
I think in FY22, Airtel Payments Bank made a profit. Do you think FY23 was also a profitable year?
Look, we doubled our profits. Actually, we more than doubled. So just to put it in context, we grew by over 130, 140% on profits. Profitability, as you know, Manojit, is a function of 2 things. One is the business model fundamentally sustainable? And second is how much of investments you want to continue to do to keep growing the business. In terms of the first point, the payment bank model is a very sustainable model because it is built on scale, using technology to deliver low-cost services, and the ability to onboard large numbers of customers because of the India stack.
Right, right.
This is unique in the world, and therefore we believe that payment banks can fundamentally serve very large number of customers all across India.
It is
And
heartening. Yeah, it is heartening to hear that you are saying payment bank model is a sustainable model, because there were hiccups to the payment banks. Many of them got licenses, some of them didn't opt to operate, and now even if only 6 are operating, only 3 are profitable.
Yeah, no, so this is actually just a simple analysis of scale. In order to build scale, one needs to onboard large numbers of users.
Right.
And one has to onboard large numbers of users, you will have slightly larger upfront costs. So payment bank model by design would break even over a decently long period of time, let us say 3 to 4 years. In fact, for Airtel Payment Bank, we set up operations in 2017 and broke even in the financial year 21-22. So it's been a 5-year journey.
5 years.
Manojit, it could have been easily faster or shorter, but we chose to keep investing, which is the second point I am making, that this model we fundamentally believe is meant to serve 500 million consumers at scale.
Can you give us an idea of what kind of customer base you have and what is the medium-term growth plan?
Today, Airtel Payment Bank serves around 55 million consumers every month across a wide range of platforms on these businesses which I just talked about. The urban business, the rural business, and the B2B business. So this 55, of course, is based in the insight that there are 500 million consumers who can upgrade themselves to better digital services or indeed upgrade themselves on the path to financial inclusion. And therefore, payment bank model should grow and keep growing.
Is there a plan to list the company and whether to get strategic investors even before the listing?
So, Marjit, this is fairly public news. I think many members, including our chairperson, has made it clear that the company will list. The time, of course, can't be commented on because of various factors, as you know, which goes into the mix. But clearly, before listing, the intent of the board would be to get in maybe a couple of rounds of strategic investors, which has many advantages, including diversification of shareholding, discovery of price, etc., etc.
Right. On that note, Mr. Biswas, it was a pleasure talking to you. Thank you for speaking to Business Standard.
Thank you, Majid. Delighted to be here. And once again, thank you for inviting me.
And now it's time for our Banking for You segment. Today, we are talking about the good old money changers who have been around since before credit cards and Forex travel cards. How has this business changed and how does it work? Raghu Mohan explains.
Did you know that in calendar year 2022, outbound Indian travelers carried more than $4 billion at the systemic level on the back of a post-pandemic rebound? This was double the 2021 volumes. Mind you, an individual can take only $3,000 for each trip abroad. The world of money changing is a big but relatively little known part of the retail finance business. It predates modern offerings like credit cards and prepaid Forex travel cards. Who are money changers? Money changers are firms which sell you foreign exchange or Forex, be it dollars, pounds, francs, or the yen. Money changers are a vital cog in the travel and tourism industry. The conversion of Forex or travelers' checks designated into rupees and vice versa is possible through authorized dealers. Category 1 of authorized dealers comprises banks, and Category 2 comprises full-fledged money changers or FFMCs. Further, these players may appoint franchisees, also known as agents, to purchase and sell Forex. Why do these players appoint franchisees? Well, it is done to allow easier Forex conversion facilities to travelers and tourists, including non-resident Indians. Franchisees provide a vast network of money-changing facilities nationwide. They allow FFMCs to offer such facilities at all tourist centers and major cities for extended hours and even holidays. What documentation do you need to buy Forex in India? To obtain Forex in India, you will need your passport, an ID and address proof like your PAN and Aadhaar, a confirmed air ticket showing travel within 60 days, and a valid visa. The money changing business has also undergone a transformation over the years. There are only 15 active money changing firms in business in India now. This is down from 40 a few years ago and down from 125 in 1998. 5 firms with a vintage of nearly 70 years control 75% of the market by volume. These are Kanji Pitambar and Company, F.R. Ratnakar and Company, Vrijlal Thakur and Company, Govind Ram and Sons, McLay and McLay. The world of money changers may come across as quaint, but they play a key role in the way you and I deal with Forex.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
So 5 firms are holding the fort of the money-changing business with a vintage of 70 years. That is something. Now, foreign banks are a different story. I spoke to our consulting editor, Tamal Bandhopadhyay, on the landscape of foreign banking in India and what role they play in the Indian economy. Hi Tamal, welcome to the Banking Show. Today we're talking about the foreign banks and changing landscape of foreign banks in India. You've raised this question in your column as well. What do you think? Has the landscape of foreign banks in India changed?
The answer is both yes and no. One way of seeing at things, the newfound aggression of some of the banks, particularly HSBC, because Citi has exited the retail space, not India alone. 14 markets, India is one of the market, and HSBC is going all out to grab that space. HSBC has got former Indian cricket captain as their brand ambassador. HSBC recently launched as a co-sponsor a coffee table book written by Mrs. Shahrukh Khan, Gauri Khan, Shahrukh Khan's wife. So everywhere, wherever there is footsteps of HNIs, high net worth individuals, HSBC is going, and so it's pretty aggressive HSBC, which we have not seen. HSBC, incidentally, is the Europe's largest bank by asset. The focus is on India. In fact, recently, I think Reuters last week reported that HSBC actually would be exiting or scaling down operations in as many as 12 markets to focus on Asian markets. So if you see the change bit, I'm seeing that here is one bank which going all out on India. But does it signify a massive change the way foreign banks have been operating in India? Certainly not. If you look at their numbers, they are roughly 1/3 in numbers of the number of banks operating in India. But when you look at their businesses, they are not in all businesses. They are very selective of where they want to be. So things have not changed. And one more point is relevant. Reserve Bank of India has opened up the segment and has actually any foreign bank can go for local incorporation. And once they are locally incorporated, they will be treated like a local bank, and they can get all the advantages of local banks in terms of branch networks, in terms of how they are being treated. But till now, only 2 banks, DBS, which the largest bank of Singapore, and SBM, State Bank of Mauritius. These 2 banks have taken this option. So had there been any change in the landscape, we would have seen more and more banks getting locally incorporated. That's not happening.
Traditionally, we have seen a lot of big announcements, but we have only seen exits. So why are they not in retail?
I think the kind of investment which one bank needs to make to be in the retail, investments in technology, investment in products and processes, investments in talent. This the foreign banks don't want to do. I mean, you need to compete with ICICI, Axis, Kotak, HDFC. These are the large-scale retail banks, and even others, State Bank of India also, if you find. In fact, if you look at the balance sheet of Indian banks, there's a quiet shift. Now, I would like to believe almost every bank has now more exposure to retail than they have to corporate India. So it's tough to compete with them in these circumstances. And foreign banks don't want to invest here where competition is so tough. Rather, they would like to focus on the areas where they have advantage over the local banks and they can make money.
So what is the role they're playing in the Indian economy? What are the areas they are operating in and making their profits from?
So the way of looking at foreign banks would not be looking at their balance sheets and the size of their assets and their loan book and deposits and so on, but how profitable are they? They are making profit. They are profitable. And where are they making profit? They're making profit in foreign exchange, mergers and acquisition space, bonds, payment space, exports, trade financing, institutional banking, MNCs supporting them and all. So they have their own niche areas. Each of them has their own niche areas. Barring a few large ones, they are into corporate banking. And for instance, Standard Chartered is as good as almost a local bank. But many of them, I think HSBC is now trying to play the role of a universal bank in India. But again, the focus is on high net worth individuals. It's another matter. It's into asset management. It's into insurance, getting back into wealth management also. Citibank has withdrawn from retail, but it's very strong in institutional banking. And everybody else, their own niches. So where they're making money. So the traditional yardstick of balance sheet, assets, etc., are not the way we should look at foreign banks. We should look at them at the profitability and look at them, the off-balance sheet items. Like even though their overall presence could be 5 and 6% in assets, but when it comes to off-balance sheet items, the derivatives, they are about 50% of the market. So that's the way foreign banks operate. I mean, don't expect them to to come here and do some social service and create and contribute to the making of India. They are in India and they want to ride on the India story, but their approach to business is very different. As long as they are making money, I think they are fine. We should not have any qualms about it.
That's great insights there, Tamal. As you said, there is no massive change in the landscape of foreign banks of India. And of course, we do expect them to play a role in the Indian economy. But as you said, that they want to make their profits. But one key takeaway is that we have to see how this story evolves, as you've written in your column as well. Thanks so much for joining us today, and we'll see you next week. Tamal makes an interesting point that foreign banks don't want to invest in retail where competition is tough, but focus on areas where they have an advantage over the local banks. This brings us to our last segment, the Business Standard poll. Last week, we asked you if it was a good decision to withdraw the 2000 rupee note. 74% of our respondents said yes, and 26% of our respondents said no, it was not a good decision. Come July 1, there will be a change in taxation policy regarding credit card spending abroad. They will be subject to tax collected at the source. Yes, there are some relaxations for individual customers, but the question we want you to answer in this week's poll is, should credit card holders be made to pay 20% tax collection at source on foreign spending? Our poll is open today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.